Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors. And this week's contract tip, we are continuing on in the wild and wacky world of financing contingencies in a contract for real property. So another issue that potentially comes up among buyers and sellers, specifically sellers, is what as a seller can you do? Or more specifically, can a seller terminate a purchase and sale agreement if the agent gets notice or information, not notice, but gets information from the buyer's lender or even the buyer's agent that the buyer's loan is not going through, or they're having issues with the loan, they're having issues with qualification of the loan, so forth and so on. What recourse does a seller have with that information from the lender or from the buyer's agent? Well, bottom line is that information is not sufficient grounds for a seller to terminate. A seller may not terminate a contract if you hear from a lender that the buyer can't qualify, or even if you hear from the selling agent that the buyer can't qualify. The financing contingency is only a buyer contingency. That is only grounds under which a buyer may terminate a contract. And for the seller, bottom line is, when a buyer and a seller go to closing under the GAR and the RE forms contract, a loan doesn't have anything to do with it. I mean, you know what I mean. Of course, it has something to do with it if the buyer's getting financed, but the contracts in and of themselves state that at closing, in the GAR contract, it says the purchase price shall be paid in US dollars at closing by wire transfer of immediately available funds. And in the RE forms contract, it states the same thing, that the buyer covenants and buyer has adequate financial resources to purchase the property, so forth and so on. Purchase price shall be adjusted by prorations, shall be payable in full at closing in cash by wire transfer of immediately available funds, immediately available of United States currency. So again, basically these contracts are cash contracts to the seller at closing. The seller doesn't have to wait 30 years to get financed. The financing part is just a buyer contingency, not a seller contingency. So let's look at this a little more closely. So the financing contingency exhibits are very interesting documents pursuant to a purchase and sale agreement. Very interesting contingencies. Basically, the contingency is the buyer and the seller agree that the buyer is that this whole purchase and sale agreement is contingent upon them being able to be financed for the specific loan as agreed upon in the financing contingency exhibit in the GAR forms, or for the loan as described in the purchase and sale agreement of the RE forms. But it doesn't mean, and again, it's just protection for a buyer terminating a contract based on not being able to meet this contingency. It doesn't necessarily mean that that is the type of loan or even the form of payment that the buyer must come to closing with. The buyer just has to come with immediately available funds, however they get them, of course, as long as it's legal. So if a contract is subject to a financing contingency exhibit, for example, let's look at the GAR conventional loan contingency exhibit, which is GAR form F64. You describe, it says, buyer shall promptly apply for and in good faith seek to obtain the conventional loan described below. And then you fill out the terms. And again, look at the last video I did where it is a license law violation if you make a contract subject to finance contingency and don't fill out all those terms. But look at that video for more information on that. And then the GAR loan exhibit describes the specific lender, use of a particular mortgage lender, so forth and so on. But then it even goes on to say, buyer may apply for a different loan. However, a loan denial letter, as described further on in that exhibit, must be for the loan described above, which are the terms that the buyer and seller agreed upon as outlined: the loan amount, term, interest rate, so forth and so on. So a loan denial letter must be for the loan described above. Buyer may also apply for a different loan other than the one different from the one described above. However, the denial of that loan the denial of any other such loan shall not be the basis for the buyer to terminate this agreement. And then it goes further on to describe the loan denial letter and what that can't be based on, so forth and so on. But the denial, so for a buyer's protection with respect to this contract, when they're making it subject to financing contingency, they may terminate if they don't meet that contingency, as long as the loan that gets denied meets the terms of the specific loan denial letter, and it is that loan as described in the exhibit that is denied. But it does go on to say the buyer may pursue any other type of loan or any other type of financing to purchase the house, to come to closing with the house. Buyer can pay cash for it. Buyer can win the lottery. Buyer can get an inheritance. Buyer can do whatever. Bottom line is, at closing, as long as the buyer comes with immediately available funds, that's what they agree to in the purchase and sale agreement. Same thing in the RE forms. The financing contingency is described in the purchase and sale agreement. And so in RE form 100, the financing contingency is under paragraph 6.3. And in that paragraph, it does state this contingency shall expire at 11:59 p.m., so many days from the binding agreement date. And it says, if buyer and seller agree to a financing contingency involving financing other than a new first or second, there's another form that has to be filled out. And then it goes on to say, such shall be, okay. In the event the financing contingency is selected, then the first mortgage, this contract is contingent upon the buyer's ability to obtain a third-party first mortgage loan to be secured by the property in a principal amount of, and again, it has a place to fill out the percentage of the purchase price, the amortization, time frame, interest rate, so forth and so on. And again, a buyer terminating a contract under the financing contingency provision, the loan that must be accompanied by a loan denial letter, and the loan that gets denied must be the loan as described and agreed upon between the buyer and the seller. And again, there are other provisions that cannot be in the loan denial letter. And in the RE forms, all of this information is described under the standard terms, which is form RE1, paragraph 6.3. So again, the financing contingencies are just protection for a buyer terminating. So again, we go back to, as a seller, what do you do if you hear from a lender that the buyer can't get that loan or isn't going to get that loan from that lender? Well, you can't do anything until the buyer terminates. If a seller terminates in and of itself, just based on that information, the seller would be the one to default on the contract. Number one, a buyer could be pursuing a loan with a different lender. As long as a buyer doesn't terminate, if a buyer does terminate on the financing contingency, again, that's that loan that must be denied. But a buyer can pursue another type of loan. A buyer can pursue a loan from a different type of lender. A buyer can get a hard money loan. A buyer can get cash. A buyer can get, there's all sorts of ways that a buyer can come to closing with readily available funds to purchase the property. So just because you get information from a third-party person does not give the seller the right contractually to terminate the contract. Now, in the GAR financing exhibits, conventional, FHA, and VA, there is a provision that states that after the end of the financing contingency period, so whatever time frame the buyer and the seller have negotiated, as soon as that financing contingency time frame has expired, at that point, then a seller, if you're binding under the GAR contracts, if you're binding under the RE forms contracts, this provision does not apply. But under the GAR contracts, and this is all spelled out in those loan contingencies, it does state that the seller may request evidence of the buyer's ability to close. And basically what that means is the seller may request from the lender a loan commitment letter with whatever conditions would be on that letter. Now, the seller may not do that if you're within 7 days of closing, but if you're after the financing contingency time frame and within prior to 7 days of closing, the seller may request that from the lender. And then the buyer has 7 days from receiving that notice to comply with providing the seller with that evidence of the buyer's ability to close. If they do not do that, then the seller sends them notice that they're in default of that provision of the contract. Then the buyer has 3 days to cure that default. And after that time frame, the seller then has 7 days within which to terminate. So there are some termination rights for the seller after the time frame for the financing contingency has passed, and then the seller must send notice requesting ability of, and this is all spelled out in paragraphs 7 and 8 of the GAR loan contingency exhibits. And then again, the seller's right to terminate, has to come after, you have to send notice requesting it, buyer has so many days to comply, and buyer has 7 days to comply with that. Then if the buyer does not send over the evidence of abilities to close, in other words, loan commitment letter from the lender with whatever conditions are on there, then the seller must send notice again that the buyer is now in default. Then the buyer has 3 days to cure, and it's only after that time frame that the seller then may terminate. But let's think about this. It kind of depends on your time frames in your contract. If, for example, you have let's just say in general, you have a 21-day financing contingency time frame and you have a 30-day closing time frame. So from binding agreement date, the buyer has 21 days for their financing contingency, and then you're closing 30 days typically, or depends on the market and the time frame. But let's just say you're closing 30 days from the date of binding. So the seller can't request this evidence of buyer's ability to close until day 22. And then the buyer initially has 7 days to comply. So they send it on day 22, buyer has 23, day 24, 25, 26, 27, 28. Buyer has till day 29 to even send over this evidence of ability to close. Then if the buyer doesn't, then the seller sends another notice that they're in default. Then the buyer has 3 more days to cure. So that would be day 30, 31, 32. And then if the buyer doesn't cure, meaning the buyer still doesn't send over evidence of buyer's ability to close, then the seller has 7 more days within which they can terminate. 33, 34, 35, 33, 34, 35, 36, 37, 38, 39. We're at day 39 when we were supposed to have closed 9 days ago. So it's interesting. It's nice that GAR Forms Committee did add in that provision. They have always had in there the right for the seller to request evidence of buyer's ability to close. But it is just in 2018 that they did add the provision, the termination rights for the seller should the buyer not comply, not produce this evidence. But again, so it is in there, but depending on the timeframes of your contract, it might not end up coming into effect anyway. But again, back to the original issue. If a seller or a listing agent gets information, an email, a phone call, a text, or whatever from a lender or even from a selling agent that the buyer is not able to qualify for a loan, can the seller terminate? And the answer in and of itself is no. So anyway, take a look at your contracts. If you have any questions, please get with your broker. Please read through the purchase and sale agreements and all the financing contingency exhibits, and let me know if you have any questions. Check with your own broker. And thank you so much for watching. Please check out, there are many, many videos I have done on these financing contingency exhibits, and take a look at those. Please browse the channel for other information. And thank you so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.